on the back of a strong set of earnings in Q4. In fact, the company's ad revenue growth at 27% was much higher than the industry growth rates. Mangalam is standing by with a brokerage verdict on the earnings performance. Mangalam?
Indeed, Reema, the stock is at a fresh 52-week high today, and at current levels, the stock actually trades at the higher end of valuations at around 34 times 12-month forward earnings as well. I spoke to the management in the interim, and they've given us some guidance with that the ad revenue growth for FY17 will be much higher than the industry ad revenue growth of 15 to 16% as well, and the EBITDA margins will be maintained at FY16 EBITDA margins at close to 25.8% itself. Now, the brokerage verdict is keeping in mind the good performance, at the same time limited in their opinion by the valuations that the company trades at. So Credit Suisse, for instance, we do have an outperform rating from them with a target price of 475 unchanged. They believe the results were operationally better than estimates. On the other hand, Bank of America Merrill Lynch has reiterated its buy rating with an unchanged target price, saying that they expect 17% ad and subscription revenue growth coming in the next fiscal, while they expect 26% EBITDA margins as well. Goldman Sachs, on the other hand, has maintained its neutral rating with a target price of 393 rupees, which is much lower than the current target price, because they believe that they've lowered their FY17 to FY19 EPS by 3% on account of the lower margin guided by the company, because they will be in investment phase in the next year itself. UBS, on the other hand, has also reduced or kept their rating as neutral with a target price of 435, because they forecast 15 to 16% CAGR in ad and subscription revenue over the next 3 years. While finally, Morgan Stanley has an equal weight rating with the lowest target price on the street of 370 rupees, because they believe that valuations for this company are still expensive at current levels.
All right. Thanks so much, Mangalam, for joining and giving us those details yesterday.